Hi, this is Jeffrey Kurt Financial Group, and today is Friday, May 30th, 2025. Made it through another month and made it through another week. So a couple of things I want to just kind of review in today's video. One is NVDA. Number two is the PCE or inflation number. Number three, the CDSs, credit default swaps. And then number four, the China trade talks. So NVIDIA came out with good earnings and good guidance and all that, and it initially drove the market higher. One thing I noticed was kind of watching was just the reaction to the news, and the NVIDIA was up $7-8, but it did not make a new all-time high, which is around 148. And they got into the low 140s yesterday and then sold off in the afternoon. The market sold off and it kind of, NVIDIA retraced. So I think, again, not so much the news, but as the reaction to the news, that maybe there's some underlying, resistance to NVIDIA and the stock price at this point. Number two, on PCE, the inflation number came in as expected. So it wasn't good, it wasn't bad. The market kind of negatively reacted, but I think there's some other things going on about the same time as the PCE number came out. And part of that was Scott Bessent and maybe the White House talking that the trade talks with China have either stalled or not going as well, and some friction there. So the market kind of weakened at that point too, and then I think it's kind of on one hand not good news, but on the other hand kind of good news in the sense that maybe a month ago you get a headline that the trade talks with China aren't going so well. The market's down 300, 400, 500 points. And that's not the case now. Now maybe a delayed reaction, or maybe there's other news. Maybe again the NVIDIA growth and AI kind of supporting the market. The markets are down here at midday as I'm doing the video, but I think that the reaction to the China statements this morning is kind of bullish. But again the NVIDIA not making a new high kind of bearish. And overall, I think that the Chinese trade talks, kind of deterioration is kind of a bearish thing at some point, but maybe not necessarily today. Finally, I just want to close with CDSs, credit default swaps, and it's really like an insurance policy that you buy on the borrower. If you're a borrower or if you're a lender, and you expect to get paid back from the borrower, that you could buy insurance that the lender and the borrower will not pay you back, and you get paid if that happens. So a credit default swap can be bought on they're very sophisticated contracts, but they can be bought on any bond or any lender like Microsoft or Apple and like that. So there are CDSs on the U.S. Treasury bond market, and interestingly, they have been going up in price, meaning there's more demand for insurance taking out against the U.S. Treasury Department and U.S. basically as a borrower in general. Not a good thing. Now, again, it's not like it's a emergency or you can't get them or there's some impending, disaster coming in the Treasury bond market. But I saw this earlier in the week that the CDS market on U.S. Treasuries is going up in price, that there's a perception that there's higher risk in buying U.S. Treasuries. Again, it's moderately higher, but it's I think something that I wanted to point out. Have a good weekend, and we'll be back on Monday. Thank you for listening. Goodbye.